Coming up today, NVDA pulls the market lower. After Jensen Huang sells $100 million worth of stock, is history really going to repeat? Bitcoin falls sharply lower. And I get you prepped for this week. It's going to be a good one, guys. Let's go. Welcome back to the Daily Market Review, everybody. Hope you had a great weekend. My name's Jared. I'm going to keep you updated every day this week on what's happening across financial markets. And we're off to a little soft start here. Thanks again to that continued rotation that started last week, especially out of semiconductors today, which was by far the weakest sector, led by NVIDIA lower. Continuing to see that rotation, I'd been thinking into small caps and value stocks. Nasdaq actually finishing down 1.3%. We saw a Russell 2000 finish up. Even the Dow Jones starting to look a lot better, the leading indice today. And volume breadth pretty good there on NYSE. Non-tech stocks 2.73 ratio of up volume stocks versus down volume. Really nice jump there in short-term breadth as well. 66% of stocks above the 20-day average, and even a really nice jump there in long-term breadth. 70% of stocks above their long-term average. New highs easily eclipsing new lows on NYSE, 62 to 15. However, not the case on the Nasdaq, 58 down versus 35 up. Typical VIX start to the week, finishing slightly higher, 13.3. And interestingly, volatility risk premium still staying pretty firm here, around 5. As government bond yields still consolidating, around 470 on the 2-year. High yield bonds still holding up pretty well there. The dollar just having a little bit of a pullback. Quite a sharp fall there on Bitcoin. And I'll come back to this one a bit later on, as I will with crude, which is still sitting pretty above $80 a barrel. But just looking at the largest stocks in the market that have big sway over the S&P and Nasdaq, there's Apple pretty much finishing flat. Same deal with Microsoft, consolidating up in this overbought zone. But look at that, NVIDIA falling 6.68%, finishing on the low, still selling off after hours as I speak. And just going down to a 5-minute chart on NVIDIA, we can see it started off weak, consolidated throughout lunch, and then really sold off hard into the close. And if I just switch over to the iShares Bitcoin Trust from BlackRock, one of the most popular and traded ones out there, pretty similar pattern. And looks like crypto will be starting to correlate with the Nasdaq again, something that had broken apart these last few weeks. And so with that price action, it brought down the whole Nasdaq. A lot of tech stocks came off here today. But if it wasn't for that market-wide breadth, S&P 500 would have come off a lot harder today, only down 33 basis points. And so like I'd been thinking, NVIDIA was due a pullback and breather after just becoming the world's largest company last week. It's pulled back, but it hasn't caused the whole market to pull back too sharply or roll over. Instead, it looks like we're getting that nice rotation from those oversold conditions last week between small caps and large caps. Closing up firmer there today, but where it really showed up is in the spread of small cap value versus large cap growth. That spread firming by over 2% today, after we had reached extremes, not only in the short term, but like I'd been showing you guys all last week, also in the long term and valuations as well. So it looks like there's money coming out of large cap growth and going into some small cap value here. Still could have a lot further to run as well. And I think what really kicked that off is kind of two things. NVIDIA printing that big headline, biggest company in the world, along with its founder and CEO Jensen Huang, offloading almost $100 million worth of stock, the most he's done in quite some time, taking advantage of these lofty prices. And it's not just Jensen, it's all his mates on the board as well, collectively dumping more NVIDIA shares lately than they have done in the past 5 years. And it's kind of funny, isn't it? It was like a buy the rumor, sell the news event that everybody could see. I'd been calling for NVIDIA to become the largest company in the world all year. And sometimes the obvious things do play out, like sell the news when it did become the largest company. Looks like Jensen Huang might have even done a bit of that. And so are we really going to repeat what happened quarter century ago when the biggest stock of the internet boom, Cisco, overtook Microsoft as well back then, became the largest company in the world briefly in late March 2000. And so here's a look at the daily stock price of Cisco back in 2000, charging up, really strong price action and trend, more than doubling in price in under a year. And then it was literally on this day here, 27th of March 2000. Overtook Microsoft, became the largest company in the world with a market cap of around $500 billion back then. Pretty much sold off straight away. A few weeks later, it was underneath the 50-day VWAP, consolidated, retested, made a new low, lower high, consolidated for a good half a year. Must have been a lot of people still hoping that it was going to break out. There's huge growth rates in the internet. Their profits and sales were soaring. It was clear to everyone the internet was going to become huge, like it eventually did. However, the stock broke down to a new low. Lower highs, lower lows, and it just kept going and going. And in fact, didn't actually bottom out until all the way in October 2002 at $8 a share. And would you believe it or not, that was a 90% drawdown, peak to trough, just 2.5 years later after it traded above $80 a share. Biggest internet company in the world was down 90%. And again, believe it or not, here we are Quarter century later, stock's still well off those $81 highs. Here at $47, market cap $190 billion. Can you imagine NVIDIA trading at half of what it's trading now and 25 years from now, in the year 2049? It's hard to imagine, but that's what markets are good at doing. Surprising, being ironic, completely going the other way, symmetry, and catching the most amount of people off guard. So it's amazing the similarities between NVIDIA now and Cisco in the late 90s. And this monthly candle isn't looking all that great, starting to form a shooting star, super stretched here, and even today still 100% higher than the 50 bar volume weighted moving average. The truth is no one knows if it's definitely a top or not. However, I think it's safe to make an argument we're more likely closer to a top than a bottom. But similar to that Cisco pattern, it could very well bounce around, retest, consolidate for another 6-8 months before making some new lower lows and lower highs. But for that to really happen, we'd really need the consumer or the economy to roll over, so big companies materially pulled back on their capital spending of GPU chips. And I'd say once we get news that some big customers are pulling back on orders, that could really cause NVIDIA stock price to give way. And who knows, it too could trade down to $10, $15 a share 2-3 years from now. Wouldn't that surprise a lot of people? But for the here and now, most of the street is still quite bullish. Unbelievably, a lot of them still have buy ratings on them. Target price is a lot higher than where we are now, but that's typical sheep herding of Wall Street and career risk. Not too many analysts want to go out on a lone island and deviate too much from the street, because if they're wrong, then the spotlight's on them. So it's in their subconscious to herd with others on the street and just kind of blend in. But soon as we get news of big customers pulling back, which is pretty much bound to happen at some point, they will quickly drop their EPS estimates along with their price targets, and like a school of fish, turn the other way. And it's not just NVIDIA that may have got a little ahead of itself. It's actually dragged the whole market to a pretty heated start for the year. In fact, the best first 117 trading days for a presidential election year ever, where we've been up as much as 15% year to date. And like I've been saying, any further gains from here in the coming weeks, the rest of the year starts looking like a 50-50, whether we close higher again or lower. So the market gets a bit ahead of itself, as on average, a full election year delivers about a 12% gain. And in fact, we'd been hitting some measures up until mid-late last week in the divergence of market breadth led by tech and semis. We saw the greatest 1 month outperformance of tech relative to the S&P 500 in the past 20 years. And not only in price action technicals as well, but also looking at a month change in the tech sector's forward PE relative to the S&P 500, hitting an all-time record. Just a huge move into tech while the rest of the market had been left behind. So I think that trade's just catching its breath. However, just looking at the spread chart of NASDAQ versus Russell, I would say don't dream it's over just yet. Still well and truly above the 50-day VWAP after having broken out of a months-long consolidation. So once again, I'm not calling for an absolute bottom in small caps here. I'm just saying long-term they're cheap. And for now, tech is still dominating this market, even though semis did take a sharp fall today, 3.4% on volume thanks to NVIDIA. We're still well and truly higher than where we started the year. So technically speaking, the uptrend is still intact. However, like I said, we may just got a little ahead of ourselves, a little overheated. And looking back in election years, we do see an increase in volatility. From mid-year going into November, especially with the VIX now around 13, we shouldn't be surprised to see it hit an 18 handle by the time we get there, especially with how this one's shaping up. And something also interesting of late is the correlation between small caps and long duration bonds. So bonds will rise in anticipation of the Fed cutting rates, especially long dated bonds like TLT, much more sensitive to interest rate changes. And so like I've been saying, if the Fed is going to go ahead and cut rates, then we may see that rotation out of large cap growth into small cap value start to accelerate, as the market's already showing signs of small caps trading similar to bonds. Not all's good with the consumer and spending. Credit card delinquencies, also got some softness in the housing markets around the world. Inventory piling up, sellers cutting their price to get the deal done. However, like the stock market, it's still mostly holding up, hasn't really given way just yet. And a lot of people in real estate, developers, investors, really banking on the Fed to cut rates soon, lower their cost of capital, increase their margins from their rent. And even though there's a big consensus out there that inflation's pretty much done, we're on that Goldilocks path back to 2%. Nothing to see here. Not so fast. According to former Treasury Secretary Larry Summers, not afraid to speak his mind, says markets are excessively optimistic about inflation, pointing towards the trend of record budget deficits that he believes will continue to support demand and put upward pressure on prices. Adding that the Fed is underestimating the long-term level of interest rates, known as the neutral rate, that will be necessary to keep prices from rising too quickly. With the Fed putting their neutral interest rate at 2.5%, Larry said should be more like 4.5%, which I would agree with him as well. Historically, 2.5% is considered very low interest rates, and generally speaking, you want to try and keep interest rates above the level of inflation, which they are now at the moment, and it's still kind of struggling to keep a lid on inflation. You can just imagine what 2.5% would do. And don't be fooled. This inflation, it's not your fault. It's not my fault. It's not any other consumer's fault. Like Ronald Reagan famously once said, we don't have inflation because the people are living too well. We have inflation because the government is living too well, which couldn't be more true this last couple of years. So a big deciding factor in all that will come this Friday. Personal Consumption Expenditures Index, Fed's preferred inflation gauge, PCE, and we've been getting some good prints on inflation data lately. The market's really hanging its hat on this one. What could also upset the narrative is if oil keeps firming from here, holding above $81 a barrel, above the 50-day VWAP. It's not a good sign. Going into the driving season in North America, 4th of July, summer, people visiting their families and friends interstate. Not to mention we've still got bubbling geopolitics, but luckily we've still got food, agricultural, commodities moving sideways, even some sharp pullbacks in wheat and corn as well, likely going to help the inflation picture for the here and now. So moving on to currencies, we got Bitcoin taking a sharp fall here today, coming to test this lowest range it's been in for a while. And there's a bit of a few reasons for that. I'd say, in addition to some hot money coming out of this market like we saw with NVDA, where German authorities seize large amounts of Bitcoin from criminals, which they're starting to sell. Also, one of the most famous hacked Bitcoin exchanges in Japan actually happened over 10 years ago. Mt. Gox holds a huge amount, 140,000 Bitcoins, that they too have come out and said they're planning on to start selling soon and repaying clients that lost their coins a decade ago. And so there we are on the chart. This is a bit of a hard one as to what to make of it. It's definitely a support zone where I was thinking we may find support here. However, just going down to an hourly chart and looking at the gusto in which it's come off with, definitely got to take note of that type of price action. If that is a flush out, then we should see a strong and sharp hard bounce here soon. If we don't, and buyers are not rushing back in, and we can't reclaim 62,000 or 63,000 in the next day or so, then that's not technically a good sign for Bitcoin here. And it has been consolidating for a few months now. So if it can't hold this level and it breaks below this low here at 56,000, puts in a new low, then that may be a confirmed downtrend, at least in the short term. But for now, it's still fair to say the medium term trend is up. We're just getting the bottom range of this consolidation zone tested. And like I said, we'll see whether we can get a sharp and hard bounce here, or if we just consolidate around here, that won't be a good sign. We've also got the yen weakening again. Looks like their intervention from the Bank of Japan just flushed $60 billion down the toilet a couple of months ago. Might have to come out bigger this time. Market's really testing them here. You can see that in the price action of the dollar yen. There's the last time they came out and intervened, brought it back to the 50-day VWAP, but it's found support and off we go again. And this is really not good for global financial markets. The third most liquid currency in the world, after the dollar and the euro, from the world's third largest economy after America and China, the value of their currency getting decimated as they're unable to really lift interest rates off rock bottom lows because they just can't afford all their debt, more than 200% versus GDP. And hopefully America doesn't go in this same direction over the next 10, 20 years. That's why it's of strategic importance for the US to hold on to its US dollar reserve currency status. If they lose that, then the US dollar could go the way of the yen. There's a look at what to expect for the rest of the week. Housing data, consumer confidence tomorrow, along with new home sales Wednesday. GDP data, going to look at how the economy's growing on Thursday. Then the big one, inflation, PCE, on Friday, along with the Michigan sentiment and inflation expectation. Starting off the week pretty much unchanged in the market's expectations. 2/3 chance Fed's going to cut in September. Fear and greed index not moving around of late, kind of seeming like it's been broken this last month or two after that big divergence with the rest of the market. And insiders not doing much trading at all this past Friday. Got a bit of a bounce there in cannabis today after it's been pretty weak this last month. There's another look at NVDA, still selling off after hours as I speak. There's Tesla, still consolidated for a couple of months now. Also interesting, we've got a bit of a rotation into financials today. Trading up pretty firmly here to start the week off. Citigroup up 2.2% and JP Morgan back above its 50-day. All right, guys, there you are. Just a quick one to start you off for the week. Typical sleepy Monday, apart from NVIDIA falling pretty hard straight out the gate. Got the rest of the market holding up and actually improving. Looking at Brett. We'll see how much further that goes this week, as in the short term, small caps are still oversold relative to large caps. We'll see how the economy's growing this Thursday with GDP. And of course, the big one, PCE, inflation data on Friday. We'll see what print we get and we'll see how the market reacts to it. But for the here and now, S&P 500 still holding its short-term uptrend and NVIDIA rolling over. Doesn't look to be spooking things at all. Volatility still low and bond yields still tame as well. Thanks very much for tuning in and sticking with Click Capital. See you again tomorrow. Cheers.